Hey, it's Clay at claytrader.com, and this will be my top 10 stocks as we head into Tuesday, October 5th. This will be a technical analysis breakdown, so if you're somebody that uses charts within your trading, or maybe you're just interested in learning more about the tool of technical analysis and how it can be used to help make good decisions, this will be a video for you. And then real quick, before I get started, I do want to personally invite you to get signed up for this free live online class that I'm offering later this week on Thursday. So if you're liking what you see, you want to learn more about the tool of technical analysis to build consistency, then like I said, get signed up for the class. If you're watching on YouTube, there's a link down in the description box you can click on. Or if you're watching this video at my site, claytrader.com, then you can just, right on the web page itself, there's going to be an area to click on. So like I said, just keep it in the back of your mind. No pressure, but if you want to learn more, you want to take your understanding to another level, then definitely get signed up for the class. First one here, ticker symbol XENE. Very, very solid day. Great way to start off the week. You look down here at the volume and just well above average volume. I mean, it wasn't even close. And I should note that I will be using the 30-minute time frame moving forward, meaning each one of these candlesticks, as they're called, represents 30 minutes worth of time. So in other words, check out the final 30 minutes of the day here. Great green candle. Volume is coming back in, which makes and sets up for a very interesting question now moving into tomorrow, and that all revolves on the fact that the price is now actually broken through that trend line. So the breakout has happened, and now it's just a question of, all right, breakout accomplished, but wow, is this the start of something much bigger? Is this the next kind of, section, next phase of momentum, if you will? And maybe it's not. Maybe this is a fake breakout. That's always a possibility too. But the core point here is that it now makes sense. It's a valid thought to be wondering, wow, is this the start of something bigger? Before the price had, broken above that level, it really didn't make any sense to say, wow, is this the start of something bigger? Because you would say, well, but the price is still down below that resistance trend line. But now that the price is above it, again, using trading jargon, now that the breakout has happened, it brings about that whole nother level, whole nother kind of area of, all right, breakout occurred. How big is this breakout going to be? So definitely a very interesting dynamic here with that, final 30-minute breakout right there. If you do like to play pullbacks, then a potential area to watch for a pullback would be down there right around the $28 mark. But for you breakout players and people that like to play momentum, again, got the breakout, not just a question of, how much more momentum is going to follow. Let's see what happens on Tuesday. Next one here, AMC, and a very important day coming on Tuesday. I guess not necessarily just Tuesday. It could be the next several days. But all this importance revolves around this area right here, which I've talked about in the past. But that green line right there, which is represented at $36.25. And while I'm not saying it's the end of the world if the price were to drop down below there, the reason why, in my opinion, it's such an important level, and again, I'm not saying this is what's going to happen, but just for explanation purposes, is if the price does break down below $36.25, well, then what do you have all of a sudden? Well, now all of a sudden you have the price having gone essentially right back to where it was before that big move up. And I mean, like I said, not to insult your intelligence, but price movements that make great moves, then all of a sudden go right back to where they were, not exactly the sign of true, genuine strength. To be fair, so far so good. The price is doing a good job. In fact, right there, it bounced right off that level. Nice little sign of strength right there. So to be fair, like I said, the price is staying above that level. My point here is that it's a pretty important level for those reasons. You just don't want to see the price going back to where it was. Now, if the price does decide it wants to start to bounce, then you still do have this overarching level up here at $40.50. But a level here that's going to eventually become more important is going to be that pink line there, the 200 period moving average, keyword being moving. So eventually that line is going to actually move down below that resistance up there. And at that point, it has more of a higher priority. So like I said, that's a moving average. So that line is going to continue to change. And that's what's going to happen over the next few days. It'll drop down below this 40.50. And at that point, that'll be the more, near term relevant area of resistance. But as of now, in my opinion, at least, the key level here that all eyes will be on, and that's very important, is that 36.25 mark. Next one here, ticker symbol FAMI, and this will mean a little bit more to those of you that watched the video from last week, but I talked about this 40-cent mark being an area of resistance, and surprise, surprise, the power of charts. Look right where the price struggled and had, some problems right there at 40 cents. Now, that doesn't mean that the price can never, ever get up above 40 cents. I'm just saying it makes sense why the price did struggle at that area there. So in the near term, 40 cents remains that key level of resistance. I'm just going to go ahead and get rid of that line for now. Yeah, it still pertains, just not really relevant right now. And from a presentation standpoint, I don't want to risk causing confusion because there's lines and clutter everywhere you look. So let's try to keep this clean as possible. So just understand that in the near term, that 40-cent mark is going to be the key level of resistance. And then as far as supports are concerned, the level here that I'm pretty curious about is that trend line right there. And in fact, let me change that to green to represent more of a bullish dynamic. But in my mind, that's going to be an important trend line to keep an eye on. And even if the price drops below it, I'm not going to say that the chart's destroyed. But at that point, yeah, the chart is going to start to look, again, uglier. Not hideous. or anything like that. But yeah, it is going to start to look a little uglier and shakier if the price drops below that level, which as of now, the price isn't even that close to it. But nonetheless, these are going to be the two main technical levels that I think matter most here moving forward over the next few days. Next one, ticker symbol CEI. And once again, this will mean a little bit more to those of you that watched the video from last week. But even if you didn't, talked about that purple line there, 50-period moving average as an area of resistance. You can see it presented a problem right there back on Friday. And then today, look at that. I mean, look how the price just cruised right along that area. And the price just couldn't get any sort of momentum. Every single time the price got up to that area and the momentum just kind of disappeared. And then, yeah, the price eventually did pull to the downside. Now, this can feel bad. This can be, oh, no, now the price is falling. Which, I mean, don't get me wrong. It's not like it's bullish, but it's not the end of the world either because, to be fair, the price is still up above that green line there, which I've talked about before at 290. Now, had the price come down there and blasted down through 290, okay, at that point, that's a much different conversation to have. But that's not what's happened. So, yeah, the pullback here, not exactly enjoyable, but from an overarching standpoint, it's not exactly the end of the world. Now, granted, if you're a day trader and you bought right there and your plan was to buy and sell within 7 seconds, well, then, yeah, from that angle, the chart's looking really bad for you. But from the overarching standpoint, the price is still above 290. And as long as that's the case, then that's still giving the chart an overall good, solid base right there. But it just goes back to, confirm that the level here that I talked about previous is, going to be a very stubborn level here from the resistance side of things. Current value of that 50-period moving average, now they're at 355. Next one here, ticker symbol PROG. And what a crazy, crazy day here. I mean, just goes to show how fast the market can turn. I mean, went from right here looking like, breakout coming of these previous highs, to then check out that 30-minute session. 30-minute time period, down the price went. And now things are looking relatively sketchy here. I know there's a lot of people out there watching this one, talking about this one, so I want to give a couple thoughts on it. But yeah, there's no need to beat around the bush. I'm not going to say that the chart is epically destroyed, but it's certainly looking a little sketchy here. And the level of support, in my mind, that is going to be very important moving forward. We'll be down here right around this $1.25 mark. Because, I mean, if you stop and think about it, if the price were to go down to $1.25 and still be able to maintain above it, what would you have from the overarching bigger picture point of view? Well, you would still have a set of lows right there. You'd have lows there. You'd have lows there. And if you envision those as stair steps, then overarching, you still do have stair steps progressing in the upwards direction. So that would still be a generally speaking bullish chart. Now, yes, I realize, again, like I mentioned on the previous one, if you're a day trader and you bought right there and you wanted to buy and sell within 10 seconds, well, then yeah, from that angle, the chart looks absolutely terrible for you. But I'm talking about things from more of the bigger picture point of view. So yes, things are certainly looking shaky, but is the overall chart epically destroyed? In my mind, that's a little too far as of right now. In terms of areas of resistance, if this thing does try to bounce, first key level going to be right there at the $1.60 mark. So keep a close eye on that with any sort of attempted bounce. Next one here, SNDL. A pretty rough looking chart, but I do know it's one of those that there's still a lot of people out there following it, asking about it. So trying to keep things, this one updated every now and then. But like I said, I realize I state the obvious, very rough move today. But the big dynamic here that happened was, there was, a respectable trend line here. You could say, you know what, maybe this thing's going to bounce off the trend line. And the crazy part here was, I mean, it tried, right? You had the lows there, you had it bounce right off of there, and then you had it bounce right off of there today. So build a little bit of hope, with that third bounce off that trend line, but then that 30-minute period came down here, broke down through there, and the rest was history. More momentum picked up. And that also now becomes a very important level, because if there is any sort of attempted bounce in the upwards direction, then that trend line right there is going to be the main resistance area that the price will have to fight up through. So like I said, with any sort of attempted bounce, it's now all about that trend line, which as of now, right around, we'll call it 65 cents, give or take. As far as areas of support are concerned, key level to watch going to just simply be where the bleeding finally stopped today, which was down there at 6. And let me zoom back in so you can see this a little bit more better. But you can see right here at 63 cents. Price did do a great job of holding strong. I mean, multiple times the area was tested, and to give credit where credit's due, the buyers did step up right there. But those are certainly going to be the two main dynamics right there. Trend line of for resistance, and then right there 63 cents key level of support. Next one here, ticker symbol SDPI. And as I've said with a couple other ones, it's another matter of, what is your perspective going in? I fully realize for those of you that were day traders that bought up there, chart's looking terrible. But from an overarching standpoint, I mean, I'm sure there's some people that are excited about today's movement. What do I mean by that? Well, they're thinking, well, look at that time when it pulled back, went to new highs. Look at that time when it pulled back, up it went. Look at that time when it pulled back, up it went. Now, let me be very clear. Just because this has happened several times before where the price has pulled back and then gone, back in the upwards direction, Does not mean that for sure guaranteed the price is going to do that again. My point here, and this is the power of charts, is it at least valid? Is it at least a rational thought to have that, hey, this thing might turn itself back around? Yeah, it's absolutely valid. Of course, not guaranteed to happen, but I mean, it's happened several times before, so it makes sense for somebody to at least think that. As an example, let's say it's never come back before, and then somebody's sitting there saying, you know what, I think this thing's going to recover. You would be totally justified to say, what are you talking about? Based on what? I mean, it's never recovered before. But in this situation, it's recovered 3 times before. So again, does that mean it's guaranteed to happen? No, of course not. But it's more than a valid thought to have. So there's going to be a bunch of pullback players out there that are liking this one. They're noticing that the overall trend is still up. And it's just a question of, hey, you know what? I like to buy pullbacks. This pullback, whenever this thing has pulled back in the past, it's recovered nicely. So if you are somebody that likes to play pullbacks within uptrends, this is one that might be worth keeping an eye on. Next one, ticker symbol WISH. And like SNDL, there are still a lot of people out there following this one. And, not to state the obvious, but obviously a very, very rough day here as this thing finally broke down to new lows. And these are lows that have not been seen for months upon months upon months. And it's just really a question of, when is this selling pressure going to alleviate? How can you know if the selling pressure is alleviating? And I understand those are just words like, okay, Clay, that's great. Of course, we want to see the selling pressure alleviate. Okay, but how do you do that, right? Because that's just kind of like empty words. But that's the great part about charts is they allow you to take words, phrases, and make them very visual and quantifiable with numbers. And in my mind, the first step, the first warning sign that maybe, just maybe, the selling pressure is finally lessened up some, you got to watch that purple line there, the 50-period moving average. In my opinion, as long as the price is down below that purple line, then the bears are in full control, and there's really no debate about it at all. Now, even if the price gets slightly above it, don't get me wrong, that doesn't mean that everything is turned around, but at least it's a step in the right direction. But as of now, as long as the price is down below that area, then the selling pressure is in full force. The bears completely own the chart. So that's really the simple way to look at all this, and the very straightforward way is, because, you can have bounces along the way. There is a bounce. There is a bounce, but these bounces keep failing, and that's why let's keep an eye on that purple line there. If the price can actually get some closes up above there, then at that point you can start to change the conversation to, okay, maybe the bears are finally gone. But as of right now, in my opinion, at least, like I said, you got to say that the bears are still in full control. Next one here, ticker symbol OPGN, and what an ugly looking chart. But I like to do ugly because, as you loyal listeners have heard me say before, sometimes there's opportunity in ugly. Now, other times there's not. That's why risk management, that's why stop losses exist. But sometimes you can get some really nice opportunity, and that's what we have here. So, just to quickly recap things, what a brutal day. Huge gap up. Think about it. True story. There were people that bought right there. Somebody bought way up there. And then from that time, down it went. But upon doing that, it went all the way down, closed the gap right around $2.80, and then look what it did after it closed that gap right there. Those former breakout points bounced right off it. Now, again, like I said, just because it's closed the gap and it's bounced, does that mean that for sure guaranteed this is going to recover back upwards? No, there's no guarantees. But is it at least is it at least a rational thought to have, okay, that gap's been closed. Okay, after the gap's closed, it showed some strength. So maybe, just maybe, this thing's going to, consolidate out and then make another attempt and move to the upside. Yeah, that is a more than valid thought process to have. Doesn't mean that'll happen. Hence, again, risk management, why it's so important. But it's at least worth keeping an eye on. So if you're somebody that likes to play ugly charts and you like to try to take advantage of those moments that seem it's the end of the world, then all of a sudden turn around, then this is one that, definitely has got to be on your watch list. Next one here, ticker symbol AREC. Now, this one doesn't look nearly as ugly, but it is one of those situations where if you like to play big momentum spikes and then try to play the pullback for a secondary type move, that is exactly what's going on here. So there's the big momentum spike. Very clear. Huge move from $1.90 all the way up to, well, we'll call it $2.60. But now you have things looking kind of ugly, kind of scary. But again, this is all occurring within an overall momentum spike. The price is still up above both the key moving averages, the 200-period moving average, the 50-period moving average. And this could, again, no guarantees, but it's not irrational. It's not just random to think that, $2 is an interesting area. It's not random because, well, you have the 200-period there, you have the 50-period sloping up. So to think that the price could come down to that area, find some support, and then turn itself around. That is a valid thought process to have. And I know I keep repeating myself, but I really want to hammer home, there are no guarantees. So I'm not saying the price is going to drop to $2 and then for sure bounce, but it's by no means some sort of random area, right? And that's what I mean by the power of charts, is they're helping us avoid random decisions. Because when you're doing stuff randomly, that's just gambling. We don't want to gamble. We want to make rational, logical decisions. And to think that the price could come down around $2 and then potentially bounce, yeah, makes for an interesting, rational thought process to have. So we'll see what happens with it. But yeah, if you're somebody that likes to find those big momentum spikes that then start to pull back, again, this is one that should be on your watch list. And that wraps up the top 10 for today. Again, I want to personally invite you to get signed up for this class. So if you liked what you saw and you want to make the commitment to just make an investment into yourself from a time perspective, do some learning. And like I said, the class is totally free. It'll be this Thursday on October 7th. At 7 p.m. Eastern time, so keep that in mind. So definitely get signed up for this class if you enjoyed what you saw here in this video. And then as far as these top 10 videos are concerned, if you like this format, if you would like for me to continue to make these videos, then they do require quite a bit of time and effort, but I have no problem doing them as long as I know people enjoy them and like them and find them helpful. So you can communicate that to me by doing two easy things. Hit the like button. Leave a basic comment. It could be the number one. It could be a smiley face. It could be a ticker symbol that you're traded today or that you're watching tomorrow. But those two things, like button, basic comment, communicate to me that it's worth the time and effort. And as long as I know that's the case, then I have no problem doing these at all. And again, if you want to learn more about technical analysis and the tool of charts to build consistency as a trader, then definitely get signed up for the class. Hopefully everybody got off to a good start to the week. I'll see you back on Tuesday.